What is going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we are definitely doing something way different than what I've made in the past. Specifically in today's video, I want to talk about me investing in a retirement fund at the age of 22. What I did, my plans for the future, things like that. Pretty much just a rant. If you guys are interested in knowing why it's important, why you guys should probably take advantage of it no matter how old you are, definitely make sure to subscribe, watch to the end, leave a giant thumbs up, help out that YouTube algorithm, and let's jump into today's episode. So hopefully you guys know who I am. If you guys are previous subscribers, you know that we normally just talk about cryptocurrency, Bitcoin, Litecoin, Ethereum, XRP on the channel, basically trading cryptocurrencies, using different sorts of algorithms and trends to track the market and make some money. And, you know, I've been doing YouTube as a hobby of mine for over a year now. And, you know, with that came a lot of money. And as we know, in April, you know, we have to pay taxes on it. And that got me thinking about, you know, because I made quite a bit of money at the age that I am, 22 right now, what do I do with it? You know, should I invest it? Should I buy stuff? So obviously I got an accountant. A friend of mine is an accountant, and he actually told me to definitely invest in a retirement fund. Invest when you're young, because you will be very, very, very happy come 30 years from now that you will look back at yourself when you were 21, 22, and pat yourself on the back for getting involved in a retirement fund and pretty much preparing for your future. Because I don't think many people at 22 normally think about that. So I kind of wanted to explain what it is that I did. So as you guys can see, I put out a poll last week and I got 218 votes. 72% of you guys said yes in regards to me making a video explaining what it is that I chose and how I went around making a retirement account. So that's kind of what I wanted to jump into in today's episode. So basically I was faced with the fact of either going and getting myself set up in a Vanguard or setting myself up with Fidelity. For those of you that don't know what Fidelity is, that my accountant actually recommended me to set up an account here. So if you guys aren't familiar with it, this is what it is. And basically what I decided to do was I had different options in regards to different retirement accounts to set up. But the biggest two to discuss is obviously a Roth IRA and a traditional. Now, as you guys know, I am self-employed currently, usually when I'm up at college, but I do plan on graduating very soon and I will be working full-time and actually being on the books. But for the money that I'm making self-employed, it's not taxed. You know, none of it is taxed, and I have to pay quite a bit in taxes on the money that I accumulated. So that's why I was thinking maybe I should go the traditional route, because I could actually invest that into it now and not have to worry about paying taxes on it, make that money work for me while I'm young. And then when I get older, I can withdraw it, but obviously I'll be taxed at a heavier expense, especially depending on my tax bracket. And then it was to choose a Roth IRA, which I'd be taxed now on the money that I make now, which makes sense, and then I could put it away, and when I'm older I can take that out free of taxes, which is amazing. Doing a lot of research, and hopefully it saves you guys, that there was kind of this rule of thumb that I found out when it comes to investing in a retirement fund. It's if you're making money now and you're considered at a lower tax bracket than when you will be come 30, 40 years from now, you should probably invest in a Roth IRA. And it makes sense because I'm in a lower tax bracket now because I'm not making, you know, way over six figures. So I'm taxed less now. And then when I put it in my account, hopefully when I'm closer to the age of 65, I'll be in a higher tax bracket and the money that I withdraw will be tax free. So I don't have to worry about it. Versus if I did a traditional, I'd have to spend a lot more on taxes when I get older. So that's why I chose the route of a Roth IRA. From just starting this and being fairly new, obviously my mind is so focused on cryptocurrency, I had to obviously do some research in regards to what to do with a Roth IRA. I thought you just put your money into a Roth and forget about it, but no, you actually have to pick stocks to invest in that Roth IRA. Then you have to think about compounding interest and how exactly everything works. So to get on with it, these are the coins that I chose, or sorry, not coins. These are the symbols that I chose. Now, I haven't invested in all of these just yet. I do plan on investing in all of these. I need to eventually, you know, put the money into it. What I've learned with Roth IRAs is you actually have a cap right now of $6,000 per year to invest into it. Now, currently I've put in $4,000 into the account, so I am currently waiting to fill up the 2019. Due to the fact that we are in 2019 and we're currently in 2020, I can actually invest into 2019 and then 2020 in this current median right now because tax season is in April. So I have about a month to fill up my 2019, and then come 2020, or that were in 2020 right now, I can eventually put in another $6,000 into that. So in total, I'll have 12,000 in my retirement fund by the end of 2020. So these are the coins and these are the symbols that I've figured out. They're all Fidelity. They're all big index funds. We have the FSKAX, which is in retrospect the Fidelity Total Market Index Fund. Then we have the VTSMX, which is the Vanguard Total Market Index Fund. And then we have some smaller ones. This FSSNX is the small cap market fund. It's for all the small businesses invested into the Fidelity. Fidelity manages it as an index fund, but they look at the small cap businesses in America. The FSMDX is the mid cap markets. It is a big conglomerate of all the mid cap sized businesses in America that are doing well. And obviously the total market is the bigger ones in the market, Apple, Google, all those really big ones. Then we have these last two, which is FDKVX, which is the Fidelity Freedom 2060 Fund. Now this one's actually pretty interesting in regards to why I chose this. You can actually, the way they have it set up with these accounts are you can actually choose the age you plan on retiring in or the year, which is around 2060 for me. So in 40 years from now, I'd be retiring in the year around 2060. So what they do is they make it more aggressive when you're young. They make the accounts more aggressive when you're young, and they switch it more into bonds and things that are obviously less volatile as you get older, because you are obviously going to be relying on this more so for your payout. So that's pretty awesome. So that's why I chose the 2060. This is another thing I do plan on investing into once I get the funds to do it. And then the last one is the FSRNX, which is the realtor market right now, the realty market. That is the other one I'm going to eventually put in. Specifically, I've invested in two right now. With my $4,000, I've put $2,000 in the Fidelity Total Market, and I've put another $2,000 in the Fidelity Mid Cap. Eventually, I'm going to do the rest. It just takes a little bit longer, and I do believe with Vanguard, you can put, there's a minimum of $3,000 to invest into this. All the other ones are a lot, significantly lower. I think you could put in $5 and you'll be okay. And then in regards to the fee that they charge you for these, it is so insignificant, I don't even look at it. Now, I do want to discuss with you guys exactly how this works. For those of you that don't know what a Roth IRA is, a Roth is an individual retirement account that offers tax-free growth and tax-free withdrawals in retirement. And then it says Roth IRA rules dictate that as long as you've owned your account for 5 years and your age is 59 and a half or older, you can withdraw your money when you want and you won't owe any federal taxes, which is awesome. So starting it now, by the time I'm 59 and a half, or you could be pretty much as old as 54 and a half, and you can actually withdraw your money by the time you turn 59 and a half, you'll be good to go. And you can actually withdraw all this without all your profits, that is, without any real penalties. Now you can actually withdraw your original deposit. So that $4,000 that I put in, let's say it's $4,200 right now, I can actually withdraw my $4,000, but I can't touch that growth that it made of $200. Now you shouldn't. This is, trending for the future. You're setting yourself up for the future, so it doesn't make sense to withdraw any of that money now and stop its growth. And I want to show you on that topic the growth potential that this has. And this is why I think it is a great idea to start it no matter how old you are. When I saw these numbers and I cracked the age and I plugged everything in, I was very, very, very much taken back right here. So we're going to do this on a conservative scale. Then we'll look at a more average indicator. But you can see my age. I am 22 right now with a current IRA balance of 0. I literally just put in that $4,000 no more than a week ago. And if we do a conservative average expected return rate of 5%, with compounding interest, and we contribute the max amount of $6,000 a year until I turn 50, and then I can deposit $6,000 again until I turn 65 when I start to withdraw. I can then take out equal payments over the next 30 years of my life. And if we calculate this at the age of 65, my account balance will have $900,000 in it. And I'll be able to withdraw $55.8 thousand or $55,800 a year for 30 years. That's absolutely crazy, and that is a ton of money to be made tax-free, no taxes about it. Now, that is on a conservative scale. When we step things back and start looking at how exactly these pay out, you can actually be surprised at the amount of interest you'll actually earn. So if you look at the Fidelity Total Market Index, we can actually take into account a couple of things. If we look at the fund return in the past 3 years or 5 years, we'll actually use maybe Vanguard, because I do believe these are similar, and we can get that 10-year number, which it does have. This is the part that I want to talk to you about. So this is per year. So in the past year, it's earned 7.76%. We've been using 5% on our expected return, but it's been actually trending at 7.7% per year in the 3 years. Each year on average, if you average out those 3 years, each year it's equivalent 9% or accumulated 9% per year of return back. If we go then to 10 years, this is 12%. So on average, if you average out those 10 years, each year you're getting around 12% of your investment. That is incredible. So now if we take this number of 12%, which we're getting per year for 10 years, and we add this in, we plug this into the calculator, we go to 12. Now this is still fairly conservative, and we calculate this. Here's where it gets absolutely crazy. Absolutely crazy. So as we discussed, in 10 years, every year for 10 years, we've equivalent to 12% average return on investment. If you plug that in with compounding interest to the calculator, that means at 65, my account balance will be $7,264,000, and I'll be able to withdraw $805,000 annually for 30 years. Put that into perspective. That's absolutely amazing, and that is a crap ton of money. That's pretty much the reason why I got involved with setting up a retirement fund. This is an incredible amount of money, and it's really preparing yourself for the future. A lot of people don't invest in their future or think about it, but I think starting young is honestly the best plan. And to be able to make $805,000 per year for 30 years is pretty incredible. But that's pretty much going to wrap up the video, guys. Hopefully you guys learned a lot, and let me know down below in the comments what you think, if you guys have one or some other opinions on real estate or investing or a retirement fund. But that's pretty much going to wrap up the video, guys. If you are new to the channel, definitely make sure to subscribe, turn on post notifications, leave a giant thumbs up, and I will see you in tomorrow's video. Peace.